Hey guys, I'm Barry Page and this is Legacy Money. In today's video, we're going to talk about banking, specifically fractional reserve banking and infinite banking. So let's get started. My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. This video is about how to avoid fractional reserve banking and create your own private system that you can utilize for banking with your family or business. So when it comes to banking, have you ever thought about who's in control of the banking function in your life? You do have a choice. So traditionally in our country, we use fractional reserve banking. What is fractional reserve banking and why does that matter? With fractional reserve banking, there are reserve ratios for banks. Banks borrow money through the overnight window of the Federal Reserve. They are required to keep 10% of your deposits on hand, and they can loan out the other 90%. Now, I've discussed this in previous videos, so you might want to check those out or do your own research. The Federal Reserve Act authorizes the Board of Governors to establish these reserve requirements to implement monetary policy. Theoretically, banks are allowed to do this to expand the economy by freeing up capital for lending. The fractional reserve requirement has traditionally been 10%, but according to the Federal Reserve website, recently this has been reduced to near zero. Reading from the Federal Reserve website, as announced on March 15, 2020, the board reduced reserve requirement ratios to 0% effective March 26, 2020. This action eliminated reserve requirements for all depository institutions. Supposedly, this action eliminates reserve requirements for thousands of depository institutions and will help to support lending to households and businesses. So you just have to ask yourself, who is in control here? Who determines these requirements? And what are the outcomes of lending more than a bank has in reserve? Unfortunately, fractional reserve lending is a detriment to depositors. Of course, borrowers are supposed to have more access to capital, but just ask yourself, do you feel like lending requirements have eased or tightened in recent years? Plain and simple, money creation is inflation. So at the end of the day, reserve ratios, fractional reserve lending favor the banks. The house always wins, right? Banks are able to lend money that they do not have in reserve. Inflation is a result of an increasing money supply. Banks aren't worried if they have deposits available. Think runs on banks. So banks know that they will be bailed out. Think back to 2008, 2009 and the bank bailouts. So there's bailouts and now we have bail-ins. What's a bail-in? So once your money is on deposit with the bank, they own it, they control it. Who pays for bailouts? Who loses with bail-ins? Inflation is a result of increasing the money supply. Each time a loan is made, the money supply increases. This is inflation, to inflate. So making loans perpetuates the problem. Fractional reserve lending also creates dependency on the banks. We are dependent on credit scores. We're dependent on the banks to loan or lend us money. Credit scoring, your FICO score. And pretty soon, you'll have an ESG score if you don't already. All of the major banks are on board with ESG. If you borrow money from a bank, who determines the terms of the loan? Who sets up the payment schedule? Well, of course, the bank does. So you have a structured repayment schedule. And what happens if you don't repay the loan on their terms? Well, obviously, You'll default on the loan. There may be a foreclosure, bankruptcy, or a repossession. When you use fractional reserve lending, you are under the bank's rules. You are abiding by their rules. You'll have structured payment, and rates and terms of the loan can change. You may be familiar with adjustable rate mortgages. What would you do if you had one of those ARMs and the loan rate went up? How would that change your payment and your ability to make the payment? So already we're dealing with inflation today, and what most people just consider prices going up, things like gas, energy, food. But what we're talking about here at the root cause is an increase in the money supply. Okay, so let's look at the flip side. What else can you do? Well, there's a concept. It's called the infinite banking concept, which is really just a financial strategy. It's a process for controlling the banking function in your life. What it amounts to is a private account, a place to store your capital. It's not an investment. It's a place to store your capital and create financial freedom, financial independence, so you don't ever have to depend on the banks or the government for money. It provides protection, savings, and the growth opportunity for your money. It provides liquidity, use, and control of your money. And you can have financing options on your terms. You do have to qualify, just like you would qualify for a bank loan or credit. But the good news is you only have to qualify one time if done correctly. There is no credit scoring, and you don't ever have to worry about that again as long as you follow a few simple rules and capitalize your system. It's an easy process. You don't have to go to the lender to ask if you can borrow money once you establish your own infinite banking account. And best of all, there's an unstructured repayment schedule if you do borrow funds, meaning you can set up the terms to repay the loans. In essence, you really don't even have to repay these loans because we're going to use life insurance as collateral. And your collateral capacity will determine the amount that you can loan. In other terms, how you've capitalized your banking system. You have to put money in, and then you can utilize that account, your equity, your collateral, to borrow money out. And should you die or not repay the loan, then the outstanding loan would just be deducted from the death benefit. And one of my favorite benefits is that these accounts are tax exempt if used correctly, meaning you never will have to pay taxes on the money in this account if it's distributed either to you in the form of a loan, cash flow, or to your heirs, your beneficiaries, as long as the account is set up correctly. So let's talk about collateral for a minute. If you go to a bank or financial institution to borrow money, usually the first question that they will ask you is, do you have any collateral? What will you be using as collateral? If you borrow money to buy a house, a mortgage, the house serves as collateral. If you get a car loan, the car serves as collateral. If you go into a bank and ask for a signature loan, well, it's totally going to be dependent on your history, your credit score, and your relationship with that financial institution. So with infinite banking, we look at collateral a little differently. These accounts can be used as collateral with a traditional bank, but we prefer to use our own collateral capacity. Well, what does that mean? Well, that means how much capital have you put in? What is your collateral capacity? This is the amount that you will earn over your lifetime. And you just have to ask yourself, how much of that money that you earn will you keep? Your collateral is determined by you. You can borrow from one of these accounts the amount that you have in collateral. These accounts grow independently of markets, of the economy, and based on mortality. And your collateral will increase over time, either through your payments, your repayments of loans. That's what infinite banking can allow you to do, is to use your own collateral and repay yourself so you remain in control of the banking function and you can keep the money in the family. So in closing, you have a choice. You can avoid fractional reserve banking and create your own system for finance using the infinite banking concept. You've learned what fractional reserve banking is, and hopefully I've explained infinite banking enough to whet your appetite to learn more. I'd recommend you watch my videos on infinite banking and how you can create your own private family banking system. I hope you enjoyed this video, and if you did, just give me a thumbs up. Be sure to smash that subscribe button, and I'll see you in the next video.